Are you leaving money on the table by not having multiple savings accounts? Well, today we are going to talk about a financial game changer. I'm going to break that down for you. The difference between regular, everyday savings accounts that you have at your bank, high yield savings accounts, which I'm sure you probably heard of at this point, and money market accounts. So let's get into it. But welcome back to Free Game. This is where I give you strategies to improve your life and level up. So today we're going to be talking about why you should have multiple savings accounts. Personally, I have two different savings accounts. I have a regular savings account with my bank, and I also have a high yield savings account. And, just as a disclaimer, I'm not a financial advisor and I'm definitely not your financial advisor. So this is for educational purposes. This is not to be misconstrued as financial advice. Um, the reason that I have multiple savings accounts is because number one, your regular savings account that you have with your bank is important to have. But the problem with it is that it's usually going to have a pretty low interest rate. So you're not really going to be making a lot of money on it. The upsides of having your regular savings account is that it's usually tied to your normal checking account. So you can easily transfer money back and forth between the two and, immediately get access to money if you needed it for one reason or another. Now, the problem with these, like I said, is just the low interest rate. So usually like, your normal standard banks, Chase Bank, Bank of America, etc., they're all pretty much paying 0.1% or so in interest payments on these savings accounts. So it's really nothing. So it's really not, you know, that it's important to have because it's just easy to have that liquidity and just flow back and forth between the two accounts. But I wouldn't necessarily just keep a huge, large sum of money in there just because it's not really making any money. So I kind of have money stashed away in there that I just like to keep as padding essentially. And then like my real savings, my emergency fund, and all of those types of things, that's actually in a high yield savings account. Now, high yield savings accounts, they do pay a little bit more on the amounts that you have in there. And there's a few things that you want to think about when you're trying to find one. There are several different places you can go to try to find the right high yield savings account for you. Bankrate.com, NerdWallet, Investopedia are some good places to start where you can kind of compare and contrast different high yield savings accounts, how much they pay in interest, how much you'll be making on your money basically. The things you want to watch out for is number one, do they have a lot of fees or any fees at all? A lot of them don't have any fees. Also, you want to check and see if they have any minimums. So, like, if you have to have a minimum to start and open it up, or if you have to have a minimum balance in there to actually earn the APY or the annual percentage yield that they would be paying. So, as long as you kind of check on those couple of things, you want to also just see how easy it is to be able to transfer the money to your regular checking account. A lot of them, it might take 2 days or something for the transfer to go through, which is fine because this isn't the one that you really want to, you know, immediately tap into. This is going to be like your longer term savings. And, having that longer term savings with an extra step or extra couple of days before you can actually get to it will help you, let it grow a little bit more, help it grow longer because you don't have that immediate access to it. Now, I will say that there are a few of them out there that even have like a debit card, tied to it where you can kind of like go to ATM and cash out. I don't necessarily prefer those types because it makes it too easy to just get to. And the whole purpose of having that extra one is to not only earn a higher interest yield, but to have that little barrier in between it so you don't just get to it and spend it so quickly. So you definitely want to have that kind of separated, in my opinion. The other thing you want to know about is a money market account. So you probably heard of a money market account or MMA, but basically it's similar to a high yield savings account. But the main difference is that you usually have to put in a larger amount up front to start earning the interest. And almost every single one of them comes with like a debit card that you can use and have access to. They usually do pay about the same interest rates, maybe a little bit higher than a high yield savings account in certain circumstances, but you do want to kind of eyeball that. Also, look out for the fees to see if they have any fees. If your balance drops below a certain amount, you want to kind of check on to see if there's any fees related to that. And like I said, they do usually come with a debit card. You can use those same websites I mentioned earlier to kind of compare and contrast and see if you can find any that work for you. I want to circle back to just the regular everyday bank savings accounts. When you are starting one of those, there are a few things you want to look out for as well. Some of them will have like a penalty if you don't keep a certain balance in there. Some of them will have a scenario where you can only transfer money out of it a certain amount of times per month without any penalty. So you do want to kind of eyeball and check on those things before you open up those accounts as well. But those are going to be the main things that you'll want to do. And those are kind of the difference between your regular checking account, your high yield savings account, and your money market account. The high yield savings and the money market accounts are my favorites, and I think everybody should have one. Usually they're, the interest rate can change based on what the Fed does and, how they change the interest rates. But right now, as of 2025, they're usually paying between 3 and 5%. So if you can find anything, on the higher end of that, if you can find a 4.7%, interest rate, that you're doing pretty good. And really the last thing that you want to think about is just making sure that whatever accounts you start, they are FDIC insured. That's kind of like the deposit insurance company that basically protects people that have money in the banks. If you really know the truth, then they're really there to protect banks and banks from having bank runs, but that's a subject for another day. But it also does provide some protection for your normal consumers that are putting money in banks. So there are some limits as far as the protection you can get. So if you have a ton of money in the bank, you might want to have multiple bank accounts because they only insure up to a certain level. But you all can kind of dig into that on your own time. But once again, this is just going to be a short video. We're on that money right now. We're on the money series. So I appreciate you rocking with me. Hopefully this encourages you to go and try to find a scenario where you can set up your normal savings account and at least a high yield savings or a money market account. Because, we're on that money mission in 2025. So if you have been inspired, if you learned something today, please drop the words in the comments, just money up. Just drop money up in the comments below. And I'll rock with you the next time. Please like, share, subscribe, and that's some free game.